Wow, it's great to have you here today. My name's Gary Fowler, and welcome to my show, GSD Presents Silicon Valley AI and Tech. And it's with great pleasure that I have a chance to have my incredible guests here today, Dr. Ruchi and Vikram Gupta. Welcome, and great to have you here on my show. Ruchi, can you say a few words? I mean, I've never seen a summary of anybody as deep as yours. I got to tell you, pages of things. And, from Stanford University to a medical doctor, from the UAE to your being raised in Libya. I mean, you got a broad background. So can you tell the audience a little bit about yourself and some of the things that you're involved in today?
Sure. Thanks, Gary. It's a pleasure to be here. So, as born and raised in Libya in North Africa, and my parents were both doctors. And when the Libyan sanctions happened, our family moved to Dubai. So I did part of my schooling from Libya, part of it from Dubai. Then I went to medical college in India, and I was really fond of innovation. I was really fond of innovating stuff and inventing things on my own. So I was working a lot on low cost medical devices. I was the first student of my university to get travel grants to go abroad and present papers. So that was really exciting. And I really wanted to do something in this field. And that's the reason I thought about going for an MBA. And I was lucky enough to get into Stanford. And at Stanford, there's also a Stanford biodesign course in which a lot of medical device innovation comes out of that course. So I took that course as well. And now I'm back to Dubai, and our family business has grown substantially. And we have set up a family office through which we are making investments. So in terms of investments, we are mainly making investments into healthcare because we are a family of doctors. We also do have a hospital in India and a nursing college. So that helps us in the due diligence part. And I'm really interested in the new innovations that come up, mainly in the medical device and digital health area. Apart from that, we are also LPs in some of the micro VCs, but that's not into the healthcare sector. That's just to diversify our investments further.
Wow, it's interesting. I just have a question. What made you decide to go to Stanford University?
Yeah, so I really wanted to commercialize the low cost medical devices that I made, and I went to the professors at my medical college, but nobody really understood the language of business. So they would rather present one more paper or publish one more paper in a peer reviewed journal than go and start a company. So to start a company, you really need to be risk taking. And so just to understand the language of business, I thought I'll apply to a few business schools. I applied to some of the business schools. I got into almost all of them. In fact, I got a full scholarship from MIT Sloan. I got the Legatum Fellowship there. And I went for the admit weekend, and I was really excited. But when the Stanford results came, I chose Stanford mainly because of the Stanford biodesign course, because it was all about medical device innovation.
But I hear a lot of people that go to Stanford. It's a funny thing, but they talk about the weather. I got to tell you, they talk about how beautiful, and having lived and have an office in Menlo Park, I can tell you they're probably right. So a lot of things influence an incredible amount of people. You never knew who you're going to see on the Stanford campus, right? Never, yeah. Ever. So it's great to have you here. Vikram, tell us a little bit about yourself and IVCAP Ventures. And it's fascinating. The IIT, many people don't know about it, but it's like an MIT on steroids from India. So if you can talk a little bit about that, that's great. A little bit about your background.
Sure. So I've grown up in North India and did my chemical engineering from IIT Delhi. And then worked in the pharmaceutical industry after my engineering. Went to the States, since you were talking about weather, I was actually in Cleveland, Ohio for 5 years.
Cleveland, Ohio?
Yeah. So
that's not like the hot spot of the U.S. I'm not sure why you're there, but Cleveland is like, Austin, Texas, or Boston, or Cleveland.
I did my 1-year MBA from Case Western and joined IBM Consulting. So I worked with IBM for a period of time, where I was working as part of the healthcare life sciences consulting practice. I moved back to India to become an entrepreneur, and then worked with one of the largest groups in India called Piramal Group, where I set up India's first healthcare and life sciences private equity fund. This was a $100 million fund that I raised in the year 2008. the markets were really bad, and this was after the markets had started melting down. And then I deployed that fund across various healthcare assets across India, and then set up IVCAP in 2011. And since you mentioned IITs, so our entire fund thesis is actually based on the concept of the alumni ecosystem of the IIT, the Indian Institute of Technology alumni. There were 400,000 alumni who actually, as you said, it's like the MIT of India. And even from entrepreneurship perspective, you will see if there are 35 unicorns coming out of India, more than 50% of them actually are coming from entrepreneurs with this IIT background. And our fund actually is anchored by the IIT Alumni Trust, which is a collective pool of the alumni capital. And then we also have the Indian institutions as our investors. So we invest in pre-Series A, Series A, anywhere between 3 million to 7 million kind of a ticket range. We are at $200 million funds under management. And we're in the process of raising another 200 million right now.
And do those companies have to be from India, or how does it work? So IIT graduates, but you're reaching all over the world. How, because I hear this a lot from Indian VCs that their mandate is to invest in India, not in Indian companies. So how does that work?
Yeah, so since we are our LPs are mostly Indian institutional investors along with the IIT alumni. Even if it's a company based outside of India, as long as they have a subsidiary in India, so we can invest in the Indian subsidiary. So we recently concluded a transaction in a company called LUC Data, which is actually a Bay Area based company, Indian entrepreneurs, a drug discovery AI company. But we invested in their Indian subsidiary, but we have rights in the US main business.
Interesting. And how does it work? I'm just really curious. It's just me. I feel like Columbo here, old movie show a long time ago. But how does it work? So you start up a subsidiary in India. Can those funds come back to the States to fund some of the sales and marketing effort? How does it work?
So, it's quite interesting. There's a lot of tech talent in India, right? So these companies will typically have either their back offices in India, or they'll set up teams in India, or they'll have some operations in India, and they will need some costs in India. But when they raise funds in India, they will maybe take parts of those funds to the US to fund their sales and marketing efforts, but they will use part of those funds in India as well.
I got it. And then one other thing, I just found this fascinating. You worked at IBM in clinical genomics as a practice leader. Okay, this is 2001 through 2005, right?
Right.
What were you doing back then in clinical genomics? I'm just, I write about it now, but it's like, I'm really interested. What was going on then?
This was, in fact, the first time ever, to be honest with you, even I heard the term. When I joined IBM as part of their practice, I was quite fascinated by the field. And 2001, I set up the practice for IBM, recruited a bunch of people as part of that practice. The idea was to bring together the genomics data on one side and the clinical data on the other side, and then create longitudinal records of the patient and really see a single view and really forecast or predict patient outcomes. It was amazing. We worked with Cleveland Clinic, for example, since I was based out of Cleveland, Ohio. We worked with Mayo Clinic, Mount Sinai Hospital, and the idea was to basically work with specific set of disease areas, mine into the data and really then figure out, how different parameters in the medical field are related to each other and how you can actually predict certain outcomes in patients. So that was the main objective.
No, I love that. Ruchi, I got a question for you. So Dana Group, that's your family's company, right? How big is it today? How big is your company? Or your family's company? I don't know.
Yeah.
How big?
So it's pretty substantial. Our main operations are in the Middle East and North Africa. But we do have a number of assets in India as well. For example, a hospital, nursing college, some hotels, warehouse complexes, and some other assets as well. But here in the Middle East, it's all about mainly manufacturing. So we have 7 steel factories, 3 oil factories, and we also have like some retail and real estate, commercial mixed properties in the Middle East. So that's mainly our operations here. But in terms of healthcare, it's mainly in India. Here in the Middle East, it's mainly about manufacturing, trading, and like real estate.
Wait a minute. So you're a medical doctor. Your family's business is over in India in medicine. You're in the Middle East and you're doing steel and you're so what's interesting for you to invest in and what are you looking for? What's really, if you say that's the thing that I want, what is it?
Yeah. So we're a family of doctors. Both of my parents were doctors. They practiced medicine in Libya for 13 years and then moved to Dubai and then set up the family business. And the family business initially was into medical equipment trading, but it's just like Dubai was booming back then, and like Libya was a closed economy. So we used to supply like almost all the goods to Libya because Libya was a very, very closed economy, and that's how our business grew. And then we acquired a number of sick units and transformed that over. So that was the main reason of our growth. Even in the 2008, 2009 crisis, we bought a number of distressed assets and turned them over. And even in the current COVID-19 crisis, we did the same again. So that's mainly our private equity investments. But in terms of like investments outside of the family business, it's in terms of diversification, it's mainly like healthcare that we look into because we're a family of doctors. Healthcare is something that we understand. And even in terms of the due diligence, we think that we have a substantially good network to actually help out in the due diligence. For example, if a fintech or some other deal comes to us, we're really not the experts. But when a healthcare deal comes to us, we think that we actually can make an informed decision.
Interesting. So I have viewers all over the world now. What would you say? So, and they're across the board, many of them are AI oriented companies, and many of them are in health tech and areas like drug discovery, et cetera. But what would you say to them in terms of, in terms of where you are and what are you looking for? If you take the top 3 areas that are interesting for you personally and your family, what are they?
Yeah, so we are mainly looking into medical devices, digital health, and we also have a little bit of impact angle through which we are mainly looking into like the elderly care space. So these are the top 3 main areas. We really are not the experts in biotech, so we have tried to stay away from that. But medical devices, digital health, and elderly care, these are the 3 sectors that we have made some investments into, and we would love to like carry on that thesis forward.
And how big are the checks you write? What's
So
the
we
range?
Yeah, so it starts from around $250,000 and up to $1 million. We have
Mhm.
done bigger check sizes, but that's like on opportunistic deals. Sometimes some pre-IPO deals that come across, or if there's a company that we are making a follow-up investment into. But otherwise, the sweet spot is between 250 to $1 million.
Okay, super. So we 250 to 1 million. Now, do you do it as a single investment? Or are you in some type of a syndicate, or how does it work? Are you the lead investor or follow-on investor? Where do you like to position yourselves?
Yeah, so it's usually as a co-investment with other family offices. So we are part of various networks of family offices. That's where we get a majority of our deal flow from, and we also get quite a lot of the deal flow from the Bay Area and the Stanford Biodesign program. So in terms of investment, we are not usually the lead investors. We usually don't take the board seat. We like to like participate in the syndicate along with other investors, and because we really don't have a very big team to actually take board seats and like help out in the operations of the company and all, we prefer to be just financial investors, but like in the sector that we understand.
I got it. So I got a question for you because I've heard this a lot of times.
Yeah.
It's like the secret world of family offices. I mean, it's like the secret society. It's like the Prairie of Sion. How in the world do these companies get a hold of the family offices? Because they know how to reach the VCs, but how do
Yeah.
they reach family offices? How does that go?
Yeah, so usually if you look at family offices, they don't usually have a website, and it's not a very advertised thing. But the kind of deal flow that we get is usually from the network of family offices. So there are closed door events in which like some companies come and pitch. Apart from that, I also participate in the number of like demo days of various accelerators, incubators. That helps us quite a lot in terms of the deal flow. And then it's usually about referrals, like through other founders that we have invested into or people that we know from before. And because you really need to build that trust, especially for family office investors who are like long term and patient capital compared to VC. So it's not like a professional thing that we are doing. It's just like mainly based on trust and mainly by understanding how the founders work, how well the founders understand us, and how is the like how comfortable is the situation.
I got it. Okay, super. Vikram, let's talk about this IIT thing. I'm fascinated about it. And, you were telling me before the show about, how many unicorns you're forecasting and what's going on. Let's talk about it a little bit and how it works and how the companies that are out there today that have graduated, is it only for IIT graduates or others? And is only the CEO has to be an IIT graduate or could be other members of a team?
So it doesn't have to be an IIT founder or IITian founder when we're investing, even though it's quite natural that most of our deals come through that ecosystem. So almost 50 to 70% of our deals actually happen naturally, where the IITians are the founders.
Mm-hmm.
But going back to the data points that you were referring to, if you look at the total number of unicorns in India, we're talking about 35 plus minus unicorns, with almost about 22 of them, and in fact, coming from the IIT alumni ecosystem. Whether it's Flipkart or Ola or InMobi, you name it. So Zomato. These are all Indian unicorns that are of course done very well, and the founders are all coming from the IIT alumni background. Even if you look at your businesses with valuations of $100 million to $1 billion, so even there you do an analysis of the founders' backgrounds, you'll be surprised that almost 60% of these entrepreneurs are coming with those backgrounds. And I think somebody did that research even at the global level. They actually looked at the number of unicorns and ranked them based on the backgrounds of the founders. And the IITian founders unicorns were actually fourth ranked in the world. So I think there's something interesting out there which is telling, and I think it's pretty entrepreneurial talent which is sitting there. So therefore, it becomes quite easy for us to really, even if we just go after that talent pool. We're currently looking at almost 2,000 startups coming out of 21 IIT campuses in India, and they're very, very fascinating, very interesting work going on. And then we pick them at very early stages. We started investing even at seed stages now, writing checks similar size that Ruchi mentioned, about $200,000 plus kind of ticket sizes for angel investing coming right off the campuses. But a sweet spot is 3 to 5 million.
3 to 5 million. Wow, amazing. And so the key is to find those companies early on in IIT, invest in them before anybody else, right? So you've got that knowledge and opportunity. But what happens if a company forms in Boston or out in Palo Alto? How do you find out about that company? Is a network that open that you hear about it, or how would you find those opportunities?
So we are very, very networked in the alumni ecosystem. We recently had our Pan IIT event virtually, which was attended by almost 1 million people, over 1 million people.
Wait a minute, you had an IIT event with 1 million people?
Yeah. So this was like just held in first week of December, and we had entrepreneurs of IITs who came and presented their pitches. We had the Prime Minister of India talk about the talent of India. We had the President-elect Joe Biden talk about how Indian talent is actually really creating value across different parts of the world. So there are multiple chapters across multiple geographies. In fact, Silicon Valley has the highest number of IIT alumni, followed by Indian Silicon Valley, which is Bangalore. Almost about 35,000 alumni in Bangalore. And we've been doing this as a very structured process. So we have actually a database of almost 60 to 70% of the alumni in our database already. We very actively track any events that happen across different geographies, and even participate or even sponsor such events, so that people know us in the system. And then whenever they actually are looking to raise their initial funding, they do come and talk to us. We also created a platform called Ivy Camp, which is the platform itself is an AI-enabled platform, which actually does thing for the startups, with the mentors, with the other investors as well. And there itself, we have about 3,000 curated startups on the platform, and also becomes a deal sourcing engine for us. So we have multiple sources of deals that come to us through different networks.
So what is a curated? So just so the audience knows, what is a curated company? What does that mean?
So we look at, of course, the first thing that we look at is the background of the founders. Why they're doing it. So there is a scoring system that we've created, and the scoring system actually asks lots of questions to the entrepreneurs, where the system itself will filter out. So there's a lot of negative or rejection criteria, which will reject out almost 60 to 70% based on certain standard criteria, because the volumes are very large. When you're looking at very early stage companies, it's humanly impossible to look at so many companies. So our system is able to capture a lot of data from these companies, and also tells them back why they got rejected, so they know, if it was a mistake, or if they want to improve on certain things, they can come back at some point. But once we have, let's say, top 20% startups, our teams start getting involved. They start looking at the data in more details, and then further filtration happens. Top 5% companies then come to a little bit more detailed analysis, where we start actually meeting people and then start talking to them face to face.
Okay, so what are the triggers? So what are the secret signs? So there are thousands of these companies. There are a million people at an event. What are the triggers that would say we better take a look at them?
So broadly, there are, I would say, if I were to look at just very high picture areas, of course, the number one for us is the founders and the team. We spend a lot of time on why they're doing it, how they came together, what's the backgrounds, are they mature individuals, will they be able to deal with pressure and things like those. So there are lots of questions around understanding the team. So majority of our efforts goes into that. The second part is the problem they're solving, and for the target sectors or the areas they're looking at, and there, we basically try to understand whether there's enough space out there. Is there enough white space, or even if somebody is already created a unicorn. For example, recently, a company called White Hat Junior came out of India. Within 2 years, from $0 to $300 million, they got bought over by one of the unicorns in India, Byju's. And a startup came to us and they said, we have junior of White Hat Junior. We do something very similar to what these guys do. My initial reaction was, why do you need another White Hat Junior? But I think when we looked into it, we realized that it's such a huge space and the markets are global. There are multiple ways of going after the same markets. You could create at least 3 or 4 unicorns in the same space. So we decided to invest in them. So that's how we go after companies.
Yeah, I'll have to drill down some other time. I'm very, very curious. I'm a psychologist too, so drilling down in terms of some of these soft areas is interesting. Ruchi, I know we said before the show started about the relationship with Israel and some
Yeah.
of the things there. Tell us, the audience, a little bit about what's happening and your viewpoint of it.
Yeah, so the doors to Israel have just opened up, and there are some physical conferences happening in UAE. So a lot of Israeli people are actually coming to UAE, and it's really exciting to see like the kind of energy that's there in the entire ecosystem. So a lot of these are actually Israeli VCs who are looking to bring maybe their portfolio companies here or expand to other parts of the Middle East. So I think like this, the entire ecosystem would completely change because of that, because we know that Israel is at the forefront of technology when it comes to mainly healthcare or defense. So like like healthcare is one of the sectors that we are very much interested into. So when I had a look at some of the companies that came out of Israel, it was really exciting to see, and I was really surprised to see like they have like healthcare, like electronic healthcare records for more than 25 to 30 years. So they have been working on this data for a long period of time. They have immense amount of data, and the government is really supportive. So a number of startups that come out of Israel actually like then later on go to the US. So there's possibility for them to actually come to the Middle East as well. So I think it's exciting time for us to be here in the Middle East to see that new innovation happening.
Oh, I love that. I love these bridges. You know, I was on the original management team, a Click Software, a Haifa-based Israeli company that came over to the U.S. And at the time, there weren't many Israeli companies that had made that journey. So we were right in some of the beginning of that thing. And to look at it now, it's like, this, what do they call it? Startup Nation. There's a great
Yeah.
amount of opportunities out there. In fact, it's amazing. That's cool. So if you look at it from your perspective, when you're looking at these companies, you know, what do you look at the team first, like Vikram, or what do you look at first? As if you're saying, oh, this is really cool. What's the first thing that you look at it within the company?
Yeah, it's mainly the team. It's mainly the team, and we really have to understand the founders, and that's why like COVID has made it really difficult to actually close some deals, because we really love to like meet the founders and get in touch with them face to face and really understand like what is their real motivation behind starting a company, and what's their vision for the way forward. Because it's a lot of time what we have realized, because sometimes like earlier on we used to make smaller check size investments, and that were at a pre-seed level. So a lot of those investments actually didn't go anywhere because of the founder dynamics and the relationship between the founders, and like because like it's difficult to start a startup, and eventually when the funds run out, you actually some of the co-founders leave, they look for jobs and all of that. So like that completely stops the entire company. So this is something that we have realized the hard way, and so it's mainly about the team that we look into.
Yeah, I mean that's a big challenge, right? That's one of the reasons that I started GSD is because you look at it, we look at it, there's three levels. There's startup 1.0 is acceleration, startup 2.0 is regional dominance. Each one of them have hurdles, but startup 3.0 is how do you go global, right? So you can have a great team, it's some of the smartest people in the world, but then how do you do that, especially during COVID? It's a
Yeah.
very, very difficult situation. And you're right about trust, right? You want to get to know the people. We used to go out to Hobie's in Palo Alto and to the breakfast place, and we'd have breakfast or lunch there. That's how we got to know the folks. They would come from Sand Hill Road, or I got money from Chinese, Israeli investors, European, but that's where we would meet. Now the situation is a lot of it's based on trust. It's changed a lot in the last year. In fact, I mean, so if you look at 1 year ago today, how has it changed for you in terms of investing? Let's say pre-COVID to now during the COVID crisis. How's it changed for you, Ruchi?
Yeah, so we did actually make some investments during the COVID times as well, and the main reason for that was that there were some really good opportunities that came across, and the valuations were really low. Some of them were distressed deals as well. But in general, what we have seen is that the healthcare valuations have really gone up. But still, there were a couple of investments that we made. But like we did have a number of Zoom calls. We did like very thorough background check on the founders. That's how we developed the comfort. But like we didn't want to like lose out on this opportunity, because like healthcare valuations are actually rising quite a lot, and other investors who never looked at healthcare before are suddenly starting to get excited about this domain. So we thought that since we are in this sector and it's an opportunity that is of interest to us, so we actually ended up writing some checks. But like we definitely did a lot of like background checks, a lot of Zoom calls with the founders, and took our own sweet time, saw the progress that they made over the months, and then decided to like make the investments.
How much longer did it take for you to make an investment compared to before, during the pre-COVID, post-COVID?
Yeah, I would say at least like 3 months longer. So usually we used to make investments not so quick, but within 3 months. So now it took us around 6 months, or even
Wow.
more in one case. Yeah.
Wow. Yeah, that's a long time for founders. That's
Yeah.
for that could be forever, right? Vikram, how about you in terms of situation? How's it for you in terms of the pre-COVID, now in the post-COVID, not even post-COVID, COVID present world? How the investment times and decisions, how have they changed?
So we made 8 investments last year. Uh, Two of them were in healthcare. The rest of them were, one of them was in consumer, and the rest were in B2B SaaS businesses. Uh, I thought, the reason we got this healthcare deal, which I was talking about, was mainly because of COVID, because they actually had a term sheet from another investor who developed cold feet after COVID. We thought that was an opportunity ready sitting there, and we just took the opportunity and invested in them. We got a very good deal, in fact, because of that. And we thought there was an opportunity actually during this time to actually pick up some very good uh, teams and good business models, and then actually invest in them and get good terms. So we decided to do that. Even though April to June, that time frame was a very tough quarter actually, because that was the first phase of lockdowns in India, and almost everything was shut down. But things came back very sharply in July to September timeframe, and then last quarter is actually, we've seen the kind of recovery which has never happened before. The kinds of numbers we've seen are just amazing, and that has primarily happened before because of uh, a substantial shift from offline to online. So most of our businesses actually are servicing, are either B2C businesses leveraging online platforms, or they're digital or B2B SaaS businesses, which have actually flourished during this time. So I think it was a good time overall for venture capital investing in digital businesses. We also have a portfolio of fintech companies, which has actually done brilliant. We have a company called FinPay. They actually grew 300% during COVID times, and they're servicing rural markets in India. And that too on a very large base. They were actually doing about $200 million per month of transactions in January, which actually grew 3 times by June. Given the size of population in India, the size can be huge. So I feel very good about what happened during COVID times from investing perspective.
Yeah, I mean, the one thing, like I said, I'm getting companies from all over the world. I mean, I never thought, I hadn't really spent that much time in Africa, but I'm finding really cool AI startups in Africa that I didn't know existed there before. So this democratization of opportunities, where they're coming out from everywhere and people are connecting. And I remember 5 years ago when I was one of the early Zoom users, and people said, "Why in the world would you want to do that? You have Skype." I said, "Because this is really cool. And the image is a lot better and my voice isn't so flaky. So, let's try it." And I remember when I would send out those invitations to people and they would say, "I don't want another one." Now, right, from 30 million users to 400 plus million users, daily users. And when I checked last, Eric's net worth was like $20 billion, 19 plus billion. So yeah, it's a different world, and it really moved things ahead faster than it would have happened in a normal time. It would have taken 5 to 10 years to get to where we are today, right? It's amazing. So that's the good news of this whole COVID. It pushed these type of relationships forward. Here we are, right? I'm not at my place in California. I'm down in Palm Beach in Florida. India, UAE. I mean, it's incredible, and viewers from all over the world. So, no, this is an exciting time, and the companies need to understand that they need to take action. They need to move forward. You know, the companies, the VCs that don't invest now are going to miss out on deals, and there's some incredible deals out there today. It hasn't stopped. In fact, I would say it's accelerated because now they can communicate with people in a whole different way than they could before. They don't have to wait a year to go to a startup battle someplace. They can do it online. And by the way, that's happening every week. It's incredible. So now it's great. So we're coming up to the top of the hour in terms of closing thoughts. Ruchi, what are your closing thoughts and what do you see for 2021? And how do people get a hold of you? They got a really cool startup and it's a medical startup, medtech startup. How do they get a hold of you?
Yeah, I think LinkedIn is the best place to get in touch with me because I'm really active there and it's a professional network. So like if anybody has a good startup or anything like or just wants to maybe reach out for anything, just feel free to reach out or LinkedIn. And I think 2021 would be exciting. The vaccines are already here. This is I hope this year would be kinder to all of us. And I see like especially in the Middle East, there's a lot of action happening. And even with Saudi, the Vision 2030, it's all about like moving away from the oil economy to the new tech economy. So like the countries here are really focusing a lot on like new technologies, startups, innovation. So I think like it would be exciting definitely the next decade. Yeah.
That sounds great. Okay, so LinkedIn's the best way to get a hold of you?
Yeah.
All right, super. Vikram?
Yeah, I think I'm excited about 2021 and looking forward to travel again. Actually, pre-COVID, December 19 and January 20, I remember in those 2 months, I traveled 4 countries, including China, actually 5 countries, Hong Kong, Japan, Switzerland, Singapore, and and I remember from February on, of course, onwards, no travel at all. Of course, I'm hoping that once the vaccine comes out, which hopefully should happen by April to June when they start giving vaccine to everyone. By June, hopefully we should be traveling internationally. So I'm looking forward to that. There would be a lot more investments happening this year. At least we are looking to invest in at least 20-25 companies this year. We're also looking to raise a fund. We are raising a $200 million fund. We've already halfway through. And I believe that there'll be many more newer opportunities, especially in the AI area. We're seeing very exciting opportunities coming out of India.
Yeah, no, we love it. And how do they get a hold of you? What's the best way to reach you?
LinkedIn is the best place, but of course, ivkventures.com, they can come through that, or ivcamp.in. So there are multiple ways to get it.
All right, sounds great. So I want to thank you both for taking time out of your busy schedules to join me today. It's great seeing you both. And my name's Gary Fowler. I'm the CEO, president, and co-founder of Get Shit Done, GSD Venture Studios, premier AI venture studio, helping companies go global. I appreciate it today, and stay tuned for next week when we have another edition of GSD Presents Silicon Valley AI and Tech. Thank you very much.